All right, let's welcome the first corporate on Trading Hour, Fusion Microfinance. Remember, the company listed recently. It's in focus. They've managed a good growth in their second quarter, which did help offset some of the concerns on rising NPAs and credit loss. To discuss this, we do have with us the Managing Director and CEO, Devesh Sachdev, joining in. Devesh, thank you for joining in. You know, I was looking at your profits, which got a boost from a 21% growth in interest income, whereas the interest costs increased just by about 10%. Was this on account of the IPO funds that you raised? And in light of that, what's the kind of outlook that you can provide with regards to NIIs, NIMs, the spreads, etc. going forward?
Yeah. So thank you very much for having me on your channel. The IPO money has still not been used because we just concluded IPO in November only. The NIM expansion was already, I think we have been talking about that. If you look at NIM from Q1 to Q2, now from 9.38 it has moved to 10.21. It is a combination of 2-3 things. I think one, during the COVID we had to do provisioning, so there was interest reversal, which is now with everything getting normalized. We don't need to do, there's no interest reversals now. The second aspect is the new guidelines which have come up in the microfinance sector, where we can risk the price. You know, our price can be fixed based on the risk, and we are continuing to grow. So it's a combination of these things where you will see that every quarter the NIM will grow from here, from 10.21 in Q2.
You said that IPO money has not yet been used. Going forward, that will also support your cost of funds. So that means NIMs are likely to grow further. Can you give us a sense how much of that it will be? I mean, by the end of this year, what are you looking at, say, 100 basis points higher, 50 basis points higher? What broad range are you talking about here?
Yeah. So, look, the new rates, we have started disbursing based on the new rates from May. The complete reflection of the NIM will start from Q1 of 2024. But yes, when we use this capital which we've raised, you will see that this margin definitely moving up. But how we are looking at is that maintaining a margin of anywhere between 11.2 to 11.5, and that will start getting reflected in 2024.
You said that there are these new regulations which are helping you price higher based on the risk. Could you elaborate a little bit more on it, and how does that change your business model or the way you, price your loans that you give out?
Yeah. So look, the new regulations have to be looked at from 2-3 angles. So one is that it definitely increases the sustainability of the customer, because now the regulations are uniform. It is applicable on every lender, whether you are a bank or an NBFC or SFB or an NBFC MFI or a small finance bank. So it will make, and then you have to do a credit assessment at a household level, so which will create a sustainability from the client perspective. And definitely it has made a major positive impact on the NBFC MFI, because we are now able to price our risk. So what we have done is that we have categorized our states depending on certain data point on a high and medium and a low risk, and then our rates are ranging between 19% to 22.65% within this range. So yes, what it has helped is that earlier, as you know, the margins were capped at 10%. Now we are in a position to have a margin of around anywhere between 11.3 to 11.5%. This margin expansion of around 1.5%, 1.5 bips will help us in building some extra buffers, which management overlay, which we have already done in this quarter, and give a very consistent ROA and ROEs.
All right, got that. Good morning, Mr. Sachdev. Thanks for joining us. This is Pavitra. I was looking at your AUM growth, which sequentially looks quite good. It's up around 9%. Can you tell us, do you think this is a sustainable run rate going forward, without compromising on the credit quality, or what is the kind of outlook that you would see on the AUM growth?
Yeah, Pavitra, good question. So, if you leave aside, Pavitra, the last 2 years of COVID, we have been very consistent in terms of our disbursement quarter on quarter. You will not find us doing a very lopsided that, most of the disbursement are coming in the last quarter. So if you look at the Q4, from Q4 to even the Q1 of 2022 to Q1 of 2023, the drop is very, it's only -3%. So -2 to -3%. So now every quarter you will see that there will be an increase, but increase will be only in the range of 5 to 10%. So we are more consistent, we are more calibrated. We would not like to be very aggressively growing. Also, if you look at our average outstanding, our average ticket size, we are very, calibrated. Our average outstanding with the customer has moved 8 to 10% year on year. So we will be growing and progressing in future also with a similar strength, because that's our very key strength.
One thing that confused us was the fact that you're looking at raising 145 crore rupees in terms of funds via NCDs. You just raised 600 crore rupees via fresh issue in the IPO. So why a fundraise in such quick succession? And is it because you're getting attractive rates? What exactly is the rationale here?
Yeah, I think one, it's a common look. So there are two aspects. One, raising debt is one aspect which continue to happen. We went into a discussion with about this prior to our IPO. Also, we are raising some unsecured money, which is going to really help us, because then we will have a asset which will not be tagged. So it's a combination of all these things. It's about rate. It's also about the fact that when we went into discussions, so it's a combination of all these things.
We'll leave it at that. Thank you very much for